let's go with the most important story, which is Hormuz. So Hormuz is still open-ish. Number of ships going through dropped significantly. I think that's the numbers 20, 30 ships. That's the ones with the AIS transponders on. So yeah, transponders on. I'm not sure if there's more with the transponders off, but I doubt it because Iran started striking ships. Oil prices have been pretty calm still. Now, I had a guest on from yesterday. He was explaining how it's all transitory. And that was his explanation, that the war doesn't really matter. And the reason that oil prices are so low is because the market has gone beyond it. They know the war is going to end. And he started talking about what concerns him is more. Michael Oliver was on yesterday, and he's talking about the kind of the fundamental reasons on why he's very bullish oil and why I think the price of oil will go up. And what he called it, let me actually get you the exact term he used, the degradation of the monetary not monetary system, the ongoing degradation of money units, which obviously the dollar and other currencies falling in value, and that's why commodities as a whole, including oil, will be going up in value. So
he's going to be very disappointed.
Tell me more. I'd love to hear more. So tell me first your thoughts on the price of oil.
The idea of devaluation of currency is just no. It's one of those things that people just say because people say it. I mean, yes, it sounds like it should happen because the United States is absolutely broke and getting broker by the day. And it sounds like the inevitable consequence of that would be the destruction of the dollar, but it doesn't follow because that's not how the money actually works, especially the Eurodollar system that we use. The Eurodollar is not being devalued. If anything, there's not enough monetary units. There's a dollar shortage. And that's what all the markets have been telling us. So I think, looking in the short run and the long run.
He's not talking about the US dollar. He's talking about all currencies as a whole. In relative terms, the US dollar, in his view, will still do better than other currencies because there's no alternative. But he thinks all of currencies as a whole, because of the printing that's going on, all of the currencies will be falling in value.
Yeah, I mean, they fall against the dollar because the dollar is stronger, and the dollar is stronger because there's fewer and fewer dollars available. And it's not fewer. Dollar growth is growing at a slower rate than the system actually needs. And so that deflationary impulse overrides everything else because it's a global currency and a global monetary system, and it has local impacts on top of everything. So even if you have central banks that are printing money or are undertaking accommodative policies, like in places like, almost anywhere these days, it doesn't necessarily lead to an inflationary spiral like, Weimar Germany or money printing excesses, because the global deflationary impulse comes first and foremost. And as the global economy absorbs that shock, it becomes a deflationary shock that transmits everywhere else. So markets are very clear on this. There is no inflation risk. The risk for inflation is minimal. And we have tons of markets. I mean, you can look at tips, you can look at swaps, and not just in the US dollar denomination. You look at swaps in Europe, you can look at swaps in China. There's no inflationary impulse anywhere. Oil doesn't matter. We went through this last year too. Everybody said, devaluation, currencies were going to, inflation was out of control, tariffs were going to lead to inflation. The market said, nope, not happening. And it didn't happen. So the market position has been very clear on this. We have more of a deflationary problem than an inflationary problem. And the energy shock actually adds more to it than adds to an inflationary case. Central bankers have no clue about what's happening in the monetary system, and they have even less clue about what's happening in the real economy. So they're off chasing inflationary growth, which is why we have the upside down Pringles over here. When the markets, again, have been very clear about the direction of the global economy, and even more clear with the energy shock on top of it. And that's, again, that brings us to oil prices. Why is the oil market acting so complacent to what really should be front page news or, headline stuff? You said it yourself. The Strait of Hormuz traffic is being restricted all over again, and the market basically shrugged. Now, yes, it's possible when the market opens in Asia tomorrow night that oil prices jump, but so far, there's been some pretty substantial news out of the Middle East. So, yesterday the oil market was down. You look at the curve, almost back to contango again. So we started last week with all the major benchmarks in contango. You had a little bit of a pop in oil prices with the Iran and the U.S. exchanging missiles, but it was one day at most, and then oil prices fell into the end of the week as the futures curve flattened out all over again. So there's two ways to read that. One way to read that is what you said, that the oil market is looking past the Iran conflict and saying this is all just posturing. It's about negotiations, and eventually they're going to come to an agreement. And the one side will get what they want, the other side gets what they want. And they can both declare victory and move past everything. That's the more optimistic take of oil prices where they are and how they're not really reacting to the latest news. I think the more realistic take is that oil is looking past the Iran war, not because it's optimistic or there's a clear path forward, but more so because the Iran war has led to that deflationary outbreak, which is the classic recession or classic energy shock recession case. And instead of worrying about supply, whatever's happening in Hormuz, now the attention has shifted almost entirely to demand. And it starts with China. Lack of Chinese demand is a huge, and not just, the Chinese who didn't buy oil during the worst of the energy shock. A lot of energy producers were waiting for the Chinese to come back after the energy shock was over. As oil prices were coming down, there was a lot of expectation that China was going to be a big buyer to buy up some of these marginal barrels. And China just hasn't showed up anywhere. A lot of it has to do with demand destruction in China because the Chinese economy is a mess, getting worse. I mean, just look at auto sales in China over the last couple months, absolutely crashed. So I think what my opinion is, the market is shifting from supply. I mean, supply is still a factor. It can still be a big deal, but it's more so about demand. And demand seems to be falling off substantially, and certainly substantially enough that the market can say they're going to threaten to kill Trump, and it doesn't seem to matter much at all.